Hi everybody, it's Eddie Dilleen here. Today I want to do a real quick video. This video is answering a question that was a comment below one of the other videos that I did. I believe the person asking the question, his name was Assad, I believe. Hopefully I pronounced that correct, hopefully. I'll jump right into it. Basically, the question was, look, how does the bank look at self-employed people when it comes to getting finance? How does the bank lend money to people who are self-employed? What are some of the things that they look at and some of the requirements, I believe was the exact question that he asked. So thanks for the question. Basically, long story short, I'm going to try to simplify this answer as much as possible. Now, I'll start off by saying I'm not a finance mortgage broker. Myself personally, however, I've worked with hundreds of mortgage brokers and hundreds of banks, and I've been doing this for a very, very long time, of course, with my experience in building my own property portfolio. So I know a lot of the policies off the top of my head. So I'll explain a little bit about it just from my knowledge of that side of things. So basically, I guess with some banks, and one thing to bear in mind, if you're self-employed as an example, some of the things to remember is that many banks have different policies when it comes to people who are self-employed. So what I mean by that, there is some lenders out there that require 2-year company or self-employed financials. So let's say a person's self-employed and they make $150,000 per year, and that's how much they make, say 150K, and then their actual tax return, when they actually get their tax return by an accountant, of course, the different style of accountancy things that go on when a person's self-employed, that 150 income might drop to 120 when they actually do their tax return. It's because they obviously would be claiming a lot of deductions and all that kind of stuff, depending on what kind of self-employed person they are. But usually you've got a lot of things you can sometimes, a self-employed person might buy a car and depreciate it, so that can lower your taxable income. But basically, it goes off what your yearly taxable income is that you get from the ATO. So even if you're self-employed and you've made 300 grand as an example in 1 year, and after all the expenses as an example, and your annual income goes down to, let's say 100, then they'll usually the bank will actually go off the 100K income, like your actual tax return, your personal income for that year. Now, I guess, so that's some banks, they'll require 2 years company financials. Other banks, as an example, they only require 1 year company financials. So as an example, like myself personally and a lot of clients that I deal with, some are self-employed. One of the banks actually, which was one of the recent ones that I've personally gone through, which is NAB. They look at it, sometimes only take in 1 year company financials. Sometimes if there's much of a variance, as an example, so 1 year, let's say a self-employed person does 100K, and the next year the self-employed person does 200K, they'll basically put them both together, let's say round it up to 300 over the course of 2 years, and then they'll divide it by the 2 years. So 300, they'll work it out and they'll basically go, 150 is your average self-employed income. So that's one side of it. When they actually look to the requirements and how many years, is they generally go off your tax return. So if you've only been self-employed for 3 months, as an example, it's going to be very difficult to get finance. If you've only been self-employed for 6 months or 3 months or whatever it is, usually you need a minimum of 1 year taxable income. So that's one thing to remember, 1 year taxable income. Another thing is, like, even if you're self-employed, it's good to keep track of how much you're actually paying yourself, as an example, as a wage. So you've got you can use things like Xero and QuickBooks and all that kind of stuff, but the bank always wants to see evidence, documentation that you're actually, paying yourself that kind of money. So there's many different pros and cons with being self-employed. Like a lot of people struggle to get finance that are self-employed, as an example, and like they might be earning a really good income, and the bank usually is more lenient towards people who are PAYG and actually working at a job. Let's say they're only making 70K per year and the self-employed making is 100K per year. The person working for PAYG in terms of finance, there's lenders out there that'll take first day employment. If you've got an employment contract and you're PAYG, it's a lot easier to get finance, basically, from my personal experience. That being said, another thing to talk about is like when you're casual, obviously this is going away from the question, but when you're casual, people out there that are casual, speaking to thousands of people over the years, and you can still get a loan when you're casual, basically, as long as you've got, minimum generally 3 months. I believe one of the banks is Commonwealth. I believe if they're still doing it that way, I know they were when I was worked casual in a couple of jobs, but it was minimum of 3 months employment. Some other banks it's 6 months employment when you're casual, and some other banks it's 1 year. So this is where you really need to make sure you've got the right mortgage broker a part of your team, basically, because there's many mortgage brokers out there, and if you really want to grow a property portfolio, what I always suggest to people is making sure that your broker, as an example, if you want to get to 6 or 8 properties, make sure they've actually helped someone get to 6 or 8 properties before. Ask them, how many properties do you own? What is your experience? Why would you recommend certain ways to buy property? Why would you recommend buying in different finance structures? Would you recommend cross-collateralization, all that other kind of stuff? So I guess self-employed, look, it is a little bit harder to get finance when you're self-employed, but the best thing to do is basically just pick up the phone and call a mortgage broker. First, qualify them. If you would like some help about the whole mortgage broking and finding out what your borrowing capacity is, if you're self-employed, reach out to myself and I can put you in contact with who I personally use also. So reach out and we can send you through their contact details if you like. I'll put them actually below the video in the link here, so you can reach out to them if you want to find out what your borrowing capacity is if you are self-employed. They can probably elaborate a little bit more, but generally it's minimum 1 year personal financial return. Sometimes it's 2 years depending on the lender. So many lenders have different policies, bear in mind. This is not financial advice, let me just say, but I hope this video helps. I hope I answered the question. I hope that provides a little bit more insight to it. But if you have any more questions, please comment below. Thanks so much for your question and talk to you soon. Bye.